Hello, everyone. Welcome to another episode of the Eitel Insights podcast. Once again, I'm your podcast host, Andy Park. We've got the lead analyst and founder of Eitel Insights, Dane. How's it going, Dane?
Excellent, Andy. How have you been?
Good. It's summer's wrapping up. We had a long streak of good weather, but we got poured on pretty badly here this week. But
yeah, we get some gloomy days that we haven't seen for a while back.
Yeah, that's true.
It's good for the grass, but it's bad for the tan.
Yeah, that's true. And gloomy days, I think we can look at metaphorically as well as literally. But with respect to the Vancouver condo market, but we're in good spirits now. The rain has settled, and we're excited to tackle a little bit of a different podcast today. We won't get too into the technicals, but we will look at the Vancouver real estate market from an abstract sense, and we'll be taking a look at some of the new developments that have been coming about. I think what's really interesting is with the advent of Eitel Insights, there's a lot of kind of traditional theorists and economists who are sort of shifting their positions and their approach to the market, and we want to collaborate with them, and we think both sides add value, but we'll do a deep dive into that shortly. What I want to talk about first is we had a pretty eventful week, or I guess in the past week and a half. We had a notable interview with Eitel Insights. Dane, you were able to have an in-person interview with Lynda Steele at CKNW.
That's right.
Yeah.
It was.
How did that go?
It was fantastic to finally meet with Lynda. We've been on her program a number of times, but as you say, first time in studio, so it's always nice to meet with the radio personality and TV personality in person. It was definitely a thrill. So we did the interview with Lynda. I think it went.
Sorry, Dane. Sorry to cut you off.
Sure,
Before
no
we
worries.
get into the content, because that's the meat of the podcast. But,
Sure.
what are some like reality versus expectations? Obviously, Lynda Steele's been around for a long time in Vancouver. She's a venerable figure in media. What was surprising to you about the way that her personality was in person, what her setup was in the studio, if anything was surprising at all?
Yeah, honestly, it was very professional from the word go. We get greeted at reception. You get to wait in the green room there for a while until you get to meet with the host. Me and Lynda got a chance to kind of connect a little bit off air. We talked about some interesting real estate topics, especially close to Lynda's needs. As her followers and our followers will kind of attest to that. Her father's trying to sell the condo, right? So he's moved into a home, and so she's kind of in charge of selling that. But the last year or so hasn't gone easily, right? And so we were kind of not laughing, but saying off air, when we said lower longer about a year ago, we meant it. You know what I mean? Yeah. So it's, but there is still opportunity in every real estate market, as we offer actionable intelligence, right? So, but no, it was definitely fantastic meeting with Lynda, and we got a picture afterwards for posterity's sake, and good time.
Okay. So we will post a link to that interview in the description below, so please go ahead and check that out.
And we have all of the other media interviews as well, always on itelinsights.com. So, maybe we'll get into the other features that we were in here this month.
Yeah, for sure. If we can just stay on Lynda Steele a little bit, what I found interesting about the interview is that Lynda Steele asked a lot about her personal situation and what she should be doing. And on one hand, you would think, well, I mean, Eitel Insights does look at the market as a whole, but what I really liked about that interview is that Lynda is a good proxy for the typical Vancouver buyer, right? So she's either deciding to buy or sell a specific condo. So in some sense, the interview was targeted towards Lynda's personal situation, but I think it is representative of the typical Vancouver buyer. So can you talk a little bit about the questions that, just in a summary form, the question that she asked and what your response was?
Right. The questions that she was kind of posing is, first of all, is it the realtor's fault? Is it just the overall market? Is it even possible to sell in this marketplace, right? And that's a lot of the market's question right now. What is actually going on, and that's where Eitel Insights does separate themselves, right? We offer unemotional, analytical-driven data, right? So there's, a lot of realtors or economists have gut feels, and they go with it, and sometimes they're right, sometimes they're wrong. It's kind of what we offer is a gut check, right? And I think that's what we probably saw a little bit on with Lynda again. Is it finally here? She got offers much lower than the ask price. I believe she actually lowered the ask price and then even got offers much lower than the first offer, right?
Oh, wow. Yeah.
So, and I'm sure some of the listeners can attest that that's a reality. So what we would do on a personal basis is for sure set up a consult. You know what I mean? Yes, and that's the oddity, right? I mean, our analytics are on average basis. That's what we speak to publicly. Of course, our clientele will see individual market analysis and analytical interpretation for their exact city and broken down by their asset class, right? Which is a wonderful thing for sure. Again, a gut check. And, and so not to get into too personal of the conversation with Lynda, but just even some of the other clients, it's, is it the realtor's problem or is it that I hired the wrong realtor to get the job done? And you know what? There's a yes and a no answer to that, honestly. No, it's not necessarily the realtor's fault. He or she is doing everything they can. They're holding open houses. They're returning phone calls. It's just that the buyer's market isn't that interested in purchasing today, especially with analytics. And, as you said, we called the top here in 2016-17, right? At that time, no other economists, analysts, really anywhere said that the market was going lower. Mm-hmm. So that's how we came to prominence and notoriety. And then there was an agreement, let's say, with us that, the market's falling off, mm-hmm. right? But there was never any acknowledgement that the market had topped out and they missed it, right? So it's okay. Now they're Johnny come lately. They'll tag along and say the market's going lower. But then at different quarters, you'll find this one analyst, this another analyst. It's a good time to buy. Mm-hmm. Well, let's first of all check their track record. When's the last time it was a good time to buy? And chances are you'll find out, it was a year ago. It was during 2016-17 when we were saying the market peaked out. They were still saying opportunity. Mm-hmm. It doesn't seem too often a time that they don't see opportunity in some things. Yeah. Now there is other analysts that we're more, I hesitate to say data-driven, but data reporting, you know what I mean? They would actually give realistic prices rather than the HPI price, which we've kind of all come to know and is very misleading. And they've reported the data, but as you said earlier, with our forecast being so accurate, it seems like everybody wants to try their hand at it. Right. Right. And gut feels are very difficult to actually give forecasts, mm-hmm. other than this is what I think or this is what I optimistically think and hope, maybe because I have some skin in the game. We don't have any skin in the game in that respect, right? We're strictly analytical reporting company, right? We offer actionable intelligence, we believe, to our clients, and our clients are grateful for it. On average, they've, it's saved, right? So if you sold your property when we described, you've netted an extra on average 360 some odd thousand. And we think money saved is money earned. So the buyers that didn't purchase, they saved themselves an additional 360,000, right? Yeah. So, it's all relative. We advise clients on a personal basis based on the averages, but then we break it down to their personal modus operandi. Some people, they have a need to buy. And that's what we believe is in the market, especially in the detached, as we kind of alluded to in our last podcast. The market's down 18%. Those people that were forced to the sidelines because of the stress test, they're going to start to find their way in, right? And you'll see it. And that's, again, is it the realtor's fault or not? When you list the property, chances are, depending on the realtor you're working with, unless it's an Eitel Insights referred or preferred realtor, they're using current market analysis. Now, that's current market means the last few months of sales. Mm-hmm. Well, as our followers know, we're trending lower. So the last few months is almost useless to some sense, because if you price it for the last few months and now today it's an additional 5 to 10% lower, it's not going to help you. Our realtors actually use the forecast and say, okay, from this point forward over the next quarter, we're anticipating, a plus or a negative 5%, maybe up back to 2%. So we have to be realistic to today's terms, not to last month, not to the month before, because we're going lower longer. This time next year, you'll be happy you took the offer you got today, right? So they're listing at realistic prices and trying to attract buyers that are need-based, because there's not too much investing going on. Mm-hmm. So if any purchases are in their market, it's because of a need. Mm-hmm. So you need to fill that need. If you're in a condo market, unfortunately, there's not too much degree of separation between your 2-bedroom and the guy down the block's 2-bedroom. Right. Your 1-bedroom and the gal down the block's 1-bedroom. They're fairly similar. Maybe a little bit of view here and there, but ultimately it's going to be about price. And the kicker is, today's price is better than next week's price, better than next month's price, better than the year out price for sure. And the competition continues to drive up. As the competition continues to drive up, prices ultimately go lower. Yeah. So if we can take a little bit of an indulgence break for myself, Dane, if you don't mind, I'd like to do
a little bit of a plug for the different options that potential Eitel Insights customers have, because you brought up a salient point here that I want to address. So we love doing these podcasts. We think the dissemination of knowledge and information to people who might be investors or even the typical buyer of a house need to know. The way Eitel Insights generates revenue to support podcasts like this and maintain operations is through various approaches. So at the lowest level, if you are unclear about where a market is headed, you can buy one of our static reports. They are the most affordable option. They are $250 per report. So if you want to know where the Vancouver condo market is headed over the next few years, that's a perfect option for you. If, for example, you wanted to get this information indirectly, if you need to sell right now or if you need to buy right now and you need to hire a realtor, a really good option is to actually hire an Eitel Insights affiliated realtor, because they'll have this information. They'll be armed with this information. They'll be able to incorporate that information in their selling or buying strategy, and they'll be able to relay this information for you. So that's one option. A third, we won't talk too much about prices. We encourage you to contact us at eitelinsights.com. But if you want to do an in-depth consultation about your specific property, or if you want to look at multiple investment properties, that's some of our more customized and nuanced solutions that might be a really good fit. So thank you for letting me indulge in that.
No problem, my man. And I'd just like to add a little bit, as you say, I mean, we're market driven, so we are pretty open to different levels of partnership or however it suits the client's needs best, right? So we do offer monthly updates at different various prices, depending on how many regions you want. If you want ongoing consultation, again, there's different. So, I mean, there's tons of levels from the entry level, as you say, a static report, and it's not here's to date where the market's gone down. It's here's to date how far has the market gone down, plus where's the projection, right? So I mean, it's a nominal investment for a ton of knowledge gained. After we sell you the report, we do a follow-up call. Any questions you have about that $250 report, we'll answer. I mean, it's changed the way that people look at real estate.
I just want to, so within reason though.
It's a 15-20 minute conversation.
I just want to settle the horses a little bit there, right? Like, we want to be reasonable with that. I want to touch a little bit on what you alluded to before about the economists and analysts. So as I was mentioning at the top of this podcast, there's kind of like an influx of traditional economists or market reporters who are now doing forecasts. And we actually love this. We think that this is an indication that Eitel Insights has provided value to the market. And
we're changing the way you look at real estate.
Yeah, exactly, right? So, but there are some key differences that I want to highlight here. So we're not going to mention names or denigrate anyone, but a quick Google or YouTube search for Vancouver market forecasters will kind of yield various results. But one thing that I've noticed, and correct me if you disagree or you think I'm wrong, Dane, but a lot of people, they say, okay, it's obvious now the market is at a bottom, so now it's a good buying opportunity. But the hard part to reconcile is that all these same people have been saying that the market is good to buy in for the last
the past
20
few years.
Yeah, exactly, right? So it's like, is there anything novel about this approach you're saying, or are they now simply saying the same thing they've been saying, but now acknowledging the fact that the market isn't as rosy as it's been, and now they kind of got caught with their pants around their ankles, and they need to take into account that the market isn't as hot as it used to be?
I'll leave that visual for our listeners, depending on which forecaster we're talking about, especially. But okay, so as you say, it's traditional economists, and I mean, especially if you take a long-term approach, Greater Vancouver is a great time to invest at any time. We don't think that there's any harm with trying to do better than just the 20-year outlook. I think we've pretty much established that and proven that, there's better ways than just the 20-year outlook. So we can kind of surpass those economists and analysts.
A 20-year outlook doesn't help if you are really thinking about selling in the next 2 months.
Right. And again, there's almost next to zero actionable intelligence. We'll give you a quarter-out perspective, a year-out perspective, a 2-year-out perspective, as far as we can, right? Now, as far as you say, analytics and data-driven points have become more and more prevalent. And so the traditional kind of gut feel and GDP economists, and they're looking for rationale as to maybe throw some numbers in to their similar sentiment. And as you say, 2016 was a great time to invest. Well, we were saying no. 2017 was a great time to invest. We're saying no. A few years later, we've been proven absolutely correct, and maybe them not so much, let's say, right? However, 2 years later, they will acknowledge that the market's no longer hot, but they say it's coming back any day now. Any day now, any day now. And you know what's funny about that? We still say lower longer, but I mean, we almost agree to the any day now here for a short-term outlook. You know, as we said in the previous couple of podcasts, I believe, you know, over the next quarter or two, we could see a artificial bump to the especially to the detached market and maybe even to the condo market. We're at some very interesting trend points and analytical points. The condo market is basically at where we believe to be the middle, right, on an average sale basis. It could term as a temporary bottom and show economists / analysts that don't necessarily do our trend work as a positive point. Well, a positive point is basically like a heartbeat, right? I mean, if we assimilate Greater Vancouver to a person, it's not dead yet. I mean, Greater Vancouver eventually is going to get a bid, and it's going to be way past our previous old-time highs, 10 years out. We agree with that. However, to say that it's dead is a misnomer. So it showed a heartbeat. However, every trend line that our clients see, it's still heading lower in the sales, over the course of time. However, the inventory is going astronomically higher. Mm-hmm. So even if you get nominal sales better than year over year, however, the inventory is continually growing way past year over year indicators, right? So I mean, trends matter, and a short-term blip in an overall powerful trend almost doesn't, right? Yeah. So however, that's for the long-term investor, right? Yeah. You can take advantage of that. If you're a seller and that, some of the other economists, analysts are saying it's a decent time to buy, and I mean, maybe unfortunately some people listen to that, well, take advantage of it. You know what I mean? Price your property at a reasonable price, at a forecasted market price point, and you'll be able to achieve your sale. Right. You'll be happy again that you sold today rather than a year from now, right? And quite frankly, maybe in a year from now, it would be much more difficult to sell. And that might be hard to swallow because it's difficult to sell now. Mm-hmm. Honestly, in the condo market, just wait till 2020, 2021, when we see all this influx of inventory hit the market from all those pre-sales / now trying to sell them as assignment / opportunities, even though they're lower in value. Once those properties come to completion, you're going to see a ton of inventory. Mm-hmm. The detached market, we're at the low end of the price spectrum, as we said last podcast. We expect a little bit of a bounce back, especially in the sales and the pricing. Does that mean, and what makes that up? Again, the stress test mitigated folks. Those people that could afford $1 million before got forced down to the $800,000 price point. Some properties values are down to the $800,000 price point. Does that mean there's not more to go? We believe in most areas there are. Some areas look closer to bottoming out than others, technically speaking. However, those guys have a need to buy. So it's a need-based buyer. Once that segment's purchased, what's the next segment to come and lift this market? I don't see it. And I think that's some of the stuff that the other new time data-driven analysts are missing, where we've had it for a long, long time.
Right. Yeah, that makes sense. And I think that's an important point, too. It's a little bit easier to say that the market is going lower when the market is going lower.
Right, after it's already peaked.
Exactly, yeah. I think the contrarian viewpoint that Eitel Insights provided back in the heyday in 2016 and 17, when Eitel Insights called the top when no one else did. I think that gives a lot of validity to
absolutely,
the technical analysis,
and that's why we are who we are and where we are right now. And we hope to gain, of course. And just like to say, one of the interesting things, right? We're seen as maybe negative Nelly sometimes, which is unfortunate. And I really hate to be seen as negative Nelly. Yeah. It's the matter of fact, though. Greater Vancouver, to our opinion, is going lower longer. Mm-hmm. If it was going positive, believe me, I'd say it. I'd love to give some good news. That's why we do national data, and we're getting featured more and more on a national basis about Halifax. That's promising. Yeah. Fort McMurray is bottoming out. Mm-hmm. We were published in an article said the bloodletting has stopped. Maybe not the title that I would have chosen. However, it's true. They've lost over $350,000 in 3 years on average. Yeah. That's over. So now you can start to see some price gains in those areas. So we are positive about areas that are positive. Right. However, in our opinion, Greater Vancouver is lower longer. In the meantime, can you take advantage of it if you are a seller or even a buyer for different various purposes? Absolutely. It all breaks down to your modus operandi on an individual basis. Mm-hmm. And I say that for our real estate clients, right? So what makes a market is the the number of sales and the number of listings. That's a lot of numbers, right? Mm-hmm. What makes a sale take place for the individual is literally only one buyer. So it gets very micro and very
that's a good
specific
point. Yeah.
for a buyer or a seller. And that's how we offer the information to an individual buyer or seller. Right. Unfortunately, we're not talking to a Bob or a Mary or anybody in this podcast. We're talking to everybody, right? So we're being as generalistic / specific as possible to our mind.
For sure.
And I would just like to point out one other thing. We were featured, as we said earlier, on Lynda Steele, but we were also fairly busy over the last couple of weeks getting featured after the houseboat. After I got back and we got to get to go to work again.
Yeah, had a bit of recovery.
Yeah, there was some recovery time needed. We're on the Business in Vancouver podcast with Tyler Wharton, and I believe the title of that podcast was "Did the Analysts Get It Wrong?" And that was a similar title for the Lynda Steele podcast. Again, we'll put it up on Eitel Insights, and it's available on their platforms as well. So we're still contrarian, even though we've been right the whole time, and that's okay, because that's what we feel we need to do, is continue to be right, and we get the following, and it continues to add. Also in print, we are featured in the Michael Campbell Money Talks website. We offered the charts and our basically month release to them. And an interesting article that was written by Garth Turner about our analytical release on Greater Fool. Now, he's a financial advisor, mostly in the equity market or so. But, I mean, we're newsworthy, right? Yeah. So he's been following us, I guess, for quite some time. And, so he's published us before. This article was mostly just about us, and it was literally called Gulp. So, and again, it was us saying that it's lower longer, which he believes in, and versus the other economists that say, Hong Kong's kind of going through their issues, and there's 500 million people coming back. There's going to be tons of investors, and that's a fundamental rationale. We just don't see that being an actual reality. It's kind of buy the rumor, sell the news. Right. That's the rumor. People are buying based on that. We're going to say once the news actually hits, you probably should have been selling.
Yeah, for sure.
Yeah.
And I read that article, and I think he either called you an oracle or said you had uncanny predictions or something like that. And while that is complimentary to Eitel Insights, I just want to stress that we're not making like witchcraft predictions here. These are rooted in technical analyses, and it's purely logic based, right? So,
absolutely. As we said earlier, it's it's unemotional, it's analytically driven, and it's been correct within percentage points. 1, 2, 3%, not just roundabout figures that in 20 years from now you'll be happy. We say over the next 2 years, this individual area is looking to lose another 15 to 23%. That's right. Depending on the individual area. It's not 15 to 23. It's either 15 or 23. Yeah, we give you finite examples, and then of course our clients appreciate it. Yeah. Absolutely.
Exactly. Okay, and with that, we are officially out of time. Thank you again for joining the Eitel Insights podcast. We have a request for you. If you found the information useful, please give us a thumbs up, click that subscribe button, and turn your notifications on too. So if you are subscribed, once we have a new podcast released, you'll get a quick notification and you'll be the first to the information that we release. So thanks again for joining us. We'll see you on the next one. It's fun as always. We'll see you next week.